Hey, what's going on, everyone? It's another lesson, session, video, whatever. Video of Year 11 accounting. Today, we are going to be going through the final exercise, 14.12 of subsidiary records and journals, and going to be doing the sales journal, purchases journal, as well as the associated cash and receipts and payments journal. But this time, the journals are completed for us. We're going to be looking at them and going, okay, what does this mean? So, a bit of a change of pace. So, let's bring up exercise 14.12. Let's bring that up now. So, you see here, we're on page 351. Your workbook for this exercise, it is coursework, is page 274. So Alex Macari owns Bought to Book, a shop that sells antique and rare books. All books are purchased on credit from Felix Antiques and Oscar's Books, and sales are made on cash and credit terms. As at the 31st of July, the accounts receivable, accounts payable showed the following. We can see that the accounts receivable 670 is what they are owed. They owe, they owe to accounts payable 670. That should say accounts payable. Meanwhile, this accounts receivable 1,720 is what is owing to us. You can see the journals at the bottom. These are all their credit sales. We've got this plus GST will give us our accounts receivable. Likewise, yep, that adds up. I was just looking at it like, yeah, no, that adds up. And purchases journal, we see that we purchased 1639. And then we've got our cash receipts. You can see there's been a few payments there. And then we've got some additional information. St. Swithin's University was granted a 5% discount on its first payment. So we need to work out what was that payment worth. Generally, you just assume settling the account. On the 17th, Oscar's Books granted a discount of $40, so we received this discount on additional information. On the 23rd, books worth 110 were returned, and this was Oscar's Books, and this includes GST credit note 54. And on the 26th, St. Swinburne's returned books worth $80 plus GST credit note 102. So some little key bits of info there. You've got a sales return, purchases return, a discount revenue, and a discount expense, all of those. So explain the role of the special journals in the accounting process. So let's jump in. So the roles of the special journals in the accounting process are that they allow the business to accurately track their transactions. This also enables the owner or owners to receive relevant information about the business. Alright, B, identify two subsidiary records in which transaction on the second would be recorded. So let's find the second. What two subsidiary records? So this is a credit sale. So the first subsidiary record would be St. Swithin's University accounts receivable. What are we calling this? Accounts receivable records. There we go. Record. And the other one, because it involves inventory, it's going to be inventory return. Inventory cards for August the 2nd. What are they selling? Books. I believe it's just books. And yeah, books. Antique books. That's all you need to put. Inventory, antique books. C, and I'm humming through this. C, state two reasons why using the transaction on the 4th it should not be reported as an expense. So, why should the transaction on the 4th not be reported as an expense? Reduction of liability would be reason 1. No change in owner's equity at all. Because for C, we need to talk about, hey, this is what an expense is. An expense is a reduction in assets or an increase in liabilities that results in the decrease of owner's equity. What happens when we pay back accounts payable? It's a reduction of assets, which is we're paying them back, and a reduction in liabilities. They both go down. Nothing happens to owner's equity. Therefore, that's where reason 2 comes in, and reason 1 would be what actually happens. So that's why. And you could even just little cake topper on top. Expense needs this to go down. Now this is just Mr. Donnelly thoughts here. You don't need to add that. This time I actually also put the accounts payable here, the formulas, so that should be easy too. So we're going to be for D, using the appropriate formula, calculate the balance of accounts payable and accounts receivable as at the 31st of August 2025. So let's do accounts payable. We get the starting amount, which is 670. And we write 670. We add our credit purchases, including GST, all visible from here. So from the purchases journal, 1639. We get a subtotal of 670 plus 1639, and it becomes 2309. Plus payments to accounts payable and discount revenue. Now, we need to go and look for any discount revenues we received. And if we have a look, we see on the 17th they were granted a discount of $40. So we just add 40 here. So it's 1120 plus 40, which will give us 1160. So we get the cash amount. I'm going to add a little comment here. 1120, and this is the cash payments journal, plus 40, and that's discount rev, and that was from the 17th. And you're just checking the dot points there. And then we're deducting purchase returns, and that's on the 23rd, and that's only $110. So that's our accounts payable at the end. So let's load the calculator up. So 2309 plus, minus 1160 minus 1110 will give us 1039. There we go, 1039. So we jump in and we're going to start straight to the accounts receivable. So we look at the balance at start. We go, okay, balance at start was 1720. 1720. The credit sales, we add those in and we just look at the bottom here, 2387. And then we just add in all the work, 2387 plus 1720, 4107. There we go. So just adding that through. All right, receipts from accounts receivable. So let's have a look. Don't forget, we have to include any discounts. So there was one discount and it was 5%. So how do I find the 5%? So we're going to work on a few hunches here. So 684. So St. Swithin's was 720. So 720 multiplied by 0.05 is 36. So we're going to work on the logic that they just settled their account, okay? That's the assumption. They settled the account on the 5th from the previous month. And we go 720. So 720 minus 36 is 684. That happens to work out. Now, that was a bit of an assumption, so let's just put our number in, and we're gonna backtrack. So we're gonna find the easiest way. So, was there anything on the 18th? No, there wasn't. It was 572. They just received 572. Just why not? Anyway, so we see 2736 plus 36, 2772. Minus any sales returns. I'll just put the sales returns in quickly, and that is 88, because 80 plus 10% of 10% is GST, which is 88. Okay, nice, simple. 88. Now, how do I get this? Let's try some bit of logic here. So, alright, how to calculate discount. This is purely me just speculating. So, if we offer, so we're going to put some rules in. If we offer a 5% discount, it means the ACREC would pay 95%, yeah? Because 5% discount, 95 is cash. So that's 0.95. So what we could do, or what I propose is, we go discount equals, hold on. So we need to calculate, what is the discount? We need to calculate, so one way you can go, amount received is, amount received equals total owing multiplied by percentage paid. In this case, it'll be 0.095. So, amount received, if we have a look at the transaction, we see, hey, they received 684. And then equals, we don't know what total owing is. We're guessing. We put that as X. Or you can pick whatever you want. And that would be 0.95. So X would equal 684 over 0.95. So let's try that. And I don't know if this will work. I actually don't. It does. It's 720. Which I believe lined up with what I said earlier when I calculated the 36, okay? Yep, 5% on its first payment, and I sort of just guessed it was from here. So, I'll give you a moment. I recommend pause the video now, write down this here, write down this bit here that I've highlighted. I'm going to make it bold as well, just so you can see it a bit better. So we've already got that number there, so everything as is. So just while you're doing that, I'm just going to go 272 minus 88, 2684. 2684. Nice and simple. That's how that looks. Now, you don't need to put the number there. You've already demonstrated your knowledge with all this. As long as it goes in the square, I'm happy. So E, F, and G. So for E, we're required to put in all the Oscar Books transactions, and for F, we're required to put the St. Swithins in. So St. Swithins, we'll start with that, 720. So that's one balance. Oh, one, wrong date, should be August. Balance 720. I'm going to try and go relatively fast. So on the second, we had a credit sale, document 45, should be invoice 45, amount 440, 720 plus 440 will make 1160. And then on the 5th, we had a repayment and a discount received, or discount given, because we gave it out, and that would be EFT 75. EFT 75, you can leave it blank for that one. We have a look, so it was 720, so 720 was the original amount it needs to go down by. And we see that is 36. And then we have a look, we go 684. So then it just becomes 1160 minus 684 gives us 476. Minus 36 gives us 440. I'm doing S first, by the way. And then we just have a look. All right, there's one more on the 28th. Is there any sales in between? There's a 24th sale, and sorry, let's go 24th sale. So we go the 24th credit sale, and that would be invoice 48. Invoice 48. And that'll be 429. 440 plus 429 will give us, if I'm correct, will give us 869. And then we just keep working through. So we saw there was a return of, I believe, $88 on the 26th. Yes, there was. 26 sales. We just put it in sales return. CR notes. What number was it? 102. And it was worth 88. And that becomes 440 plus 429 plus minus 88 is 781. Now, been making a mistake here. Any reduction has not been bracketed. Please remember to bracket your reductions. Make sure bracket the reductions, and on the 20, so that's the 26th. On the 28th, we received a payment of 380. Nothing after that. So repayment, and that was EFT 78 brackets 380. 781 minus 380 is 401. So there's our work right there. All done, nice and happy. Happy, happy days. And I love how the numbers have just gone topsy-turvy right out the gate. So there's our answer for F. For E, Oscar's Books. Yep, Oscar's Books. Let's move on to Oscar's Books. There we go. Oscar's Books, their balance is 260. 260. And then we're just looking through any Oscar's payables. So we got 1220. We've got 1220. We've got the 4th, which will be next. Now the payment made. How much? 260, and that is EFT 32. Brackets, because it's reducing it to 0. Because 260 minus 260 is 0. So that's the fourth done. Let's go. Oh, yep, there was a discount. 1723. We'll do the 12th now. 12th, and it is a credit purchase. And it is invoice 1092. 1092. How much? 605. 605. So that's the 12th. The next one is the 17th, where we got a discount of 40. How much was it again? The 17th. Payment made. Discount received. So the payment was EFT 35, and it was 360 and 40, and so we just go 605 minus 360 minus 40 is 205. 245. There we go. So that's the 17th done. Let's tick over. So we've done the 17th. We've got to look at the 23rd and the 20th. So we'll do the 20th because that's next. 20th credit purchase in 1105. How much? It was 352. And 205 plus 352 is 557. And lastly, we've got no other cash payments or no other purchases journal, but we've got one dot point on the 23rd, which is a purchase return. Purchase return, and that's a credit note of, make sure you put the number, credit note of 54, and it was for 110 including GST. I don't need to separate GST out, but it's 110, and it's 557 minus 1110 is 447. So that's where we're at there. So it should be your accounts payable 447, your accounts receivable should be 401 for those different amounts. Now, we did do it out of order, so just be aware of that, so you're not just blindly copying, okay? You need to be, switched on. So just double checking that. Yeah, cool. Numbers add up. Alright, G, last one, and we'll do G. Oh god, everything's breaking. G, referring to one qualitative characteristic, explain why the balance sheet does not list individual accounts payable. Quite simply, this one is relevance. And you just need to explain what relevance is and why this would not help it. Relevance consists of including information that would directly assist with decision making. In this case, listing individual accounts payable would not assist with relevance, as it would not help would not assist with relevance, as it would not help the business with future decision making. It's just something along those terms you need to put in. So that's where we're at. So that's all the exercises. Thank you for watching along. Thank you for doing this exercise. It is like, it looks long, but it's not. So on that note, make sure you like, make sure you subscribe, make sure you follow, make sure you ask any questions if you need help. And Katie, that is when you do this, okay? That's when you do it, during these videos on these good ones, not the class ones. That's awkward. Anyway, I will See you soon. Bye.